I would be able to take advantage of.
Mhm.
So, but with a
So
commercial
the
property like
count, so
this,
say it again. So like there's some potential of the land.
right? There's some potential of the land that I could build more units.
You could build more
Uh,
units on.
yeah,
Okay.
on the
How many
land.
units could build more?
So according to them, they're saying 36, uh, 36 to uh, I gotta look at it again.
Hmm.
We'll just say at least 36 more units could probably be built there. I was there last week looking at how I would try to accomplish that. And I'm not sure where they get 36. I feel like I could do more, but maybe they're basing it on what the county will allow. So
Mm-hmm.
I'm not sure. I feel like I could do more than 36 units. But anyway,
Mm-hmm. So
you know what, Sophie, I'm sorry. My partner Tim, he said
yeah,
he's trying to get on, but
he can't get on. Like okay,
let me
in
make
the
sure he
email,
does.
that's the same link, right?
Yeah, maybe uh
I can send him the invite link.
okay.
Uh
Okay.
team.
Tim Myrtle, do you have his name, his info?
Yeah, I have his probably I have his yeah, I text him, but I'm not sure that the right one. But let me put this on the chat, right?
Oh,
So you
okay.
can type, you can copy paste.
Okay, I see it there. Okay, sorry, I didn't mean to interrupt you. What were you
No,
gonna
it's
say?
good. Yeah. So I'm gonna try to allow you guys to share, so you can
Oh,
share screen and we can learn about the deal. Okay?
okay, okay, good, good. So let me see.
Can you share now?
All right, let me just send him this link real quick.
Okay.
And send. I'm just gonna put that I sent him the link.
Mm-hmm.
Check out. All right. And then let me try to
Hi, Khoa.
update there.
Good morning.
Good morning.
Good morning.
How you guys doing?
Hey, good, good.
Good, good. Thank you for showing us.
Yes, definitely. I came across your post, Sophie, and it's kind of aligned with what I've been looking. So that's why.
Yeah, so today I'm gonna ask Terren show his deal that he currently looking at. Are you under contract, Terren?
No, no.
No, you're looking at this deal, right?
Just
So we
looking
can
at
do,
it, I asked for
yeah,
that additional information from them, but that's the furthest that I've gone with it so far.
yeah.
All right,
So
so I am sharing screen. All right.
so it's a 14 unit deals in PA that he's looking at. And this is very typical because a lot of us look at, getting into multifamily and buying 10, 20, 30 units to start with. So that's why I think it would be interesting for all of us to look at it and and do due diligence together.
Right, right. So yep, so this is it. Um, yep, there goes Tim. All right.
So it's a C, so it's built, how old is it? It's
It's a good question here. It's old. The city's old. That's why I say it's old. Well, let's find out.
Hi, team. Thanks for
Hi.
coming in.
Hey, thanks for doing this.
Yeah, of course.
Let me see how old it is.
Yeah, I'm gonna see if I can find out too.
Yeah, if you can find out, Tim, that'd be awesome.
Yeah. Yeah, keep talking. I'll see if I can find out.
Okay, you guys can find out. And
So what's the
go ahead.
significance of the building class C?
So building class C's mean it's older.
It's older. Okay.
It's
Okay.
older, which mean that maybe it's more than the 80s. So
Okay.
older than the 80s. So the 80s kind of like B minus. 90, 2000 is like B, B
Mhm.
plus, right? And then 2010 is kind of like almost A.
Okay.
So
No, it's older.
it's
It's definitely
newer
older.
build. Yeah, it's a newer build than the building class. And you're gonna have the area class. The
Right.
area class will be defined ABC depend on the average income of the household in the area.
Right. Right. So this one is like on the edge of the city,
Mhm.
the more urban area of the city. It's like right on the edge, so you can take advantage of the fact that it's we can take advantage of the fact that of its location where it's at. I think it's a pretty good location. The thing I really love about it is it's right there where we currently do our business now. You know,
Ah,
it's right in our backyard,
mm-hmm.
um, where we currently have real estate all in that area. Um, so yeah, so it's probably C plus B minus where
So
it's
you
at
know
right
the
now.
tenant pools there. You know your tenants, and you know how much you're gonna get for rent.
Right, right. Yeah, we're familiar with that area to be able to I would be I I believe I know what I could get for those. Now I still would have to see each one to see, what the actual sizes are and how it's cut up and everything, but I believe I know what I could get for 1 bedroom there, 2 bedroom, 3 bedroom, etc.
Yeah, so it looks like 1986 is when it was.
Really?
Yeah,
Wow, I didn't expect that.
yeah,
1986.
1986.
86. Ah, okay. So it's not bad. It's not like
It's not
having
that, but I thought it
yeah,
was older than that.
yeah.
Wow.
So the plumbing and stuff should be better than the one that like in the 60 or in the
Right.
70. Um, but I think we know each other. But Khoa, I don't know what you would you like to introduce yourself to the group a little bit?
Yes, hi everyone. I'm Hua. I'm from San Jose Bay Area, and my main job is I'm a high-tech engineer, but I expand myself into real estate investment. And so far, uh, I have a few investment in Nashville area, and then even in the San Jose Bay Area as well. It's a duplex, but mainly, residential area. And I'm currently trying to look in to expand into other area, and commercial is one, right? And that's why I saw the media invite from Sophie is very interesting. That's why I hope to learn from you guys and have build the network there, right?
Great. Awesome.
Yep.
Awesome, welcome.
My name is Terran. I'm in the Pennsylvania area. Tim is my business partner there. And we have 11 single families or 10 single families in a duplex in the Pennsylvania area, and we're looking to expand uh, in our multifamily journey here. So this is like our first one that we really, really, really now focused in on. Uh,
Mhm.
but we're still trying to figure out, navigate whether it's a good deal, or what should we offer, what should we look for, and those kind of things. So we're just hoping to get some kind of confidence when approaching this
Right.
as we reach out to them, and hopefully Sophie can help us out a little bit with that.
Wow,
Right.
we got someone else. Hi, Roy. How you doing? I saw my friend Roy just jump on, but not sure he can talk.
There we go. I just have to hit the button.
So we go around introduce ourselves right now, Roy. So Khoa is from San Jose area. Terrain and Tim are business partner. They're from Pennsylvania. And Roy is from Arizona. So
Yes.
can you introduce yourself a little bit, Roy?
No, you did a good job. You got my name on it. That's perfect. Sorry I'm late. Tell me what's going on.
So we go around, introduce ourselves. Your turn.
Me?
Yeah.
Okay. I am a buyer operator. I've got a couple of multifamilies that I've done. I guess I should start back up a little bit. My background is I ran a property management company here in Arizona for about 20 years. And the later part of that added a construction company with it. So we did a lot of the construction on the projects that we managed. I've been in the combo of those things for 30 years or so. Tried to retire a couple of years ago, and that just doesn't work for old guys that've been busy their whole life. So I jumped back in, and this time I started buying multifamily. And I've done a couple of them and flipped them and sold them, and now I'm in the process of buy and hold. So I've got a 94 unit in Fountain Hills, which is in the Phoenix area. And I've got under in escrow a 407 unit in Tampa, Florida. And so, and I got, 2 or 3 others that I'm working on. So got it busy right now and growing, trying to keep up with Sophie.
Mhm.
We keep up with you, Roy. So we kind of like do a due diligence on the 14 units with land that Tim and Terran looking at in PA right now. Hopefully you guys be able to contribute your ideas and help them out.
Okay, whose deal is it? Taran?
Yep. How you doing there, Roy?
Good, thank you.
Yep, I'm Terran. That's my business partner, Tim, right there. So this would be our first deal of this size. Everything we've done until now is single family.
Okay.
Um, so yeah, so this is it. Uh, One thing that did stand out to me, and you can tell me, Sophie, like when they're talking about cap rate, they're not they're talking about the cap rate based on the projected income. Um, so is that usual too, that they base it on projection as opposed to what the income actually is?
Well, it should be based on the T12 and rental. Do you have the T12 and rental?
We do, yeah.
Yeah. And what is the cap rate if you are based on the current income?
3.5%.
That's pretty low.
Yeah. I mean, it's one of these things where you start looking at it and it looks great, and then you realize it looks great because they're talking projected numbers. It's almost like they, on purpose, it was like this, this can be a wonderful deal, but is a wonderful deal now.
So I think 3 point something is like a A class kind of thing. Not sure about the area. And did you look at CoStar and all, other rental comps and sales comps?
No. How am I comping a property like this? So single family, I'm just comping it, same size property, same bedrooms, same baths or whatever. But these should be based on the income coming out of it, right? Based on, so when I pull up CoStar or whatever, what am I looking for? Just other,
Yeah. So you're looking for transaction of this size, like less than, let's say, less than 60 units.
okay,
Yeah, and in the area and in the 80s, built in the 80s, similar kind of property. It's kind of like 5 comparables.
okay.
And see the cap rate, the transaction cap rate, like at the current value when they transact. Uh, is that correct, Roy?
I was going to show you what I would do.
Yep.
Let me look here. I think that doesn't mean it's right. That just that just is, you know, what I would do. Where in the world did that go? I have one here. Uh,
So then, Sophie, how much should I take into account the potential of the property then? Or should I just base it solely on what it's producing right now?
So I would say the occupancy. So right now it's 100% occupancy rate, or is it
Yes,
also
Yeah.
projection?
100%.
100%. So 100%, is it because the rent is on the lower side? Can you guys come in and increase the rent and get the cap rate of 7.2?
Not
I'd have to
7.2.
see
I
the
mean, yeah,
I'd have to see the condition,
yeah. I
but
mean, just knowing what we know about the rents, there's probably some room to go up on some of them. The only thing is there's people they actually list like how long some of them been there. There's people have been there like 12 years. So, trying to figure out like how to increase rent for like longer term tenants. And one of the rent, we'd have to see, one of the rent was pretty good, higher, pretty reasonable. So, but yeah, the rents seem low to us. Like we know the area. And those rents seem low currently.
Seem low, but not extremely um low,
right,
I would say.
Yeah,
right.
yeah. I wouldn't say they're extremely low.
And again, that's without actually seeing the
Yeah.
condition too.
Okay. What if you what if you push the condition inside, like what if you push renovate? Let's say you have one vacancy and then you renovate it to really modern.
Hmm.
How much is the maximum you can get for one bedroom?
Um, yeah, I think
Well, we have what you have that HUD sheet, right? The HUD sheet would
yeah,
give
look
us,
at it. I sent it to you. See what
yeah. So
let's say 12
12,
maybe.
yeah, that's what I was thinking.
I'm thinking 12.
12 for a one bedroom.
And in fact, on here, one of their one bedrooms they have currently at 12. It's
Uh, and there's like a two bedroom at 800 a month. That's like pretty
yeah,
low.
that's really
Yeah.
low. Yeah.
So the HUD, so we've done we've done looking at like HUD and Zillow. One bedrooms are around 1050 or so, two bedrooms around 13, and then three bedrooms are 17. So I mean their projected rents seem good. We don't know what it would take to get there, like from a renovation standpoint. Um,
But yes, the rents
yep,
are seem a little low.
yep.
Yeah, but then you need to like I'm just curious whether you can talk to any property management company in or any landlord in the area that have like kind of multi-unit like this and um see whether they can tell you that like what kind of finish and gonna make a difference. So look like you can do it like I don't know, quad countertop, uh as vinyl floor. Is the condition like that now, or is the condition like old school carpet and old kitchen?
So
Yeah,
you're
that was our next plan is to see it.
so you're saying how much of an improvement we can do to the apartments to the property to to get bigger increases in rent. Is that your point, Sophie?
Yeah, so I'm just curious if it's usually gonna be you have to push rent up, right? Like,
Right,
can you push it organically, which is you don't do anything, clean up, and then just increase rent? Because
right.
100% means that um it's cheap. People can afford it. And another thing is you can add value, which is rehab it, make it nice, like really nice, one of the nicest apartment in the area and get the top rent. Like, can you do that? And and that's how you can increase the rent, and that's how you can sell for more. But like this is 3.5 cap rate. It's like crazy low. Is it crazy?
It's currently, yeah. I mean, what drew us in is with this marketing sheet, it's if you go with projected rents, it's like 7.5 cap rate or 7.2. So I mean that's looking pretty good, but it's like, how do we get there?
Well,
And
you
does it
put
take
money into get there,
right,
right? Like it's not like you get there without any money.
right.
Hence, increase
Well,
the amount of cash that you put in and everything. So I think I would negotiate this price down for sure.
Right.
yeah,
Definitely.
the other thing we're thinking about is like obviously that takes time, and we're thinking like, well, what would it take to get to be, because I don't think right now it's self-sustaining, it's breaking even. So it's like, well, what can we do to what would be the price and what would we have to do to get to break even? And then work on like, all the work that needs to be done to get to those, just continuing to improve it, like long term, just continuing to improve it, whatever that is, whether it's renovating, whether it's adding amenities, whether it's building. I mean, there's a like, what is it, 2 acres? So there's plenty of room for um another building even. I mean, they
Right.
market it as like you could put 60 units here.
Yeah,
Was it 60?
it
Oh,
sells you the potential of it, but you
Yeah,
have to buy it as it is.
right, right, right. That's where we're kind of stuck. Like, how do we get it to a reasonable deal today so that we can realize all that and then get to a point where we figure out how to realize all that potential?
right.
Um,
Can you
so okay, go ahead, Roy.
let me host for a minute?
Oh, yeah. Sorry. Yep.
Let's see if I can get me there.
I think everyone should be able to share. Can you share, Roy? Can you share your screen?
Um, oh, share. Yeah. I'm sorry. Yeah. All right, here we go. I was going to show you. Here's what I did. So when I started looking around, I created this spreadsheet, and
Quite small for us. Can you make
oh,
it bigger?
sorry. Yeah,
Yeah.
I got
Like
lots of.
like full screen. Can you go full screen? Okay, yeah, maybe better. Yeah. Can you guys see it?
There
Mhm.
we go. It's coming.
Here
Yeah.
we
There
go.
you go.
Sorry. Okay, so I started out and I just kind of made a list of the things that are critical, including on them all the way down to NOI. But the thing that where I really kind of started was um, purchase price with the price per unit and a price per square foot. Excuse me, those things are pretty easy to nail down. Getting income and expenses is a little bit more difficult, but this at least gives you a head start on it. And then as I went through here, and there's a whole bunch on here. So this is kind of the critical section that I started looking at because I narrowed it down and I found a couple of zip codes that I thought were good. So what happens is these are all Scottsdale, kind of South Scottsdale. I don't know if you're familiar with Phoenix metro area, but South Scottsdale is older Scottsdale. And so I'm looking at 20 units up to a 24 unit, different square footage, but the unit price is the thing that really surprised me because we're at 390, 499, 650, and these are all units that are on for sale right at that time. Average price was 448. So I did that kind of background before I really started looking around, because if you can't match somewhere close, then then you're going to have a challenge. So what I did then is I found this project and this one. came out. Oops, sorry, wrong one. This one came out at 158,000 a door. The average is 448. Okay,
Mhm.
now I said, you know, I might be stupid, but I couldn't screw that one up, right? That's 1/3 the cost, the average cost of properties in the area. So I went and checked it out, dug into a whole bunch of things. This is the one that I actually have in escrow. But the reason I did that is because once this number popped out, I'm like, holy crap, that's something I've got to go and do. So the question is, how do you get all that information? Well, uh, have you looked at CoStar? Or CoStar is a purchase service. I don't even have that. But Crexy is a good one, and LoopNet is a good one. Those two are commercial property listing sites, and they're free. So you can go in there, you can search for zip code, search for city, search for all kinds of different things, and create a spreadsheet on what the properties are costing per unit and per square foot, and then sometimes they'll give you a cap rate. So the cap rate on each individual property is going to be different, but the important cap rate is what your market is. So your market in I'm sorry, I forgot what area this property is in.
It's in
Pennsylvania.
Pennsylvania.
Pennsylvania, yeah. So Pennsylvania's market is going to be very different than Arizona's market. And you can go out to, actually you can Google what's the current cap rate for most properties in Pennsylvania. There's an average cap rate. And that average rate kind of gives you an idea where properties are in your market. Then you can come in here, kind of get an idea what your per unit price is. And I've had 3 appraisals on this property. And as it turns out, the appraisals all came in right around this. I'm looking at the wrong numbers here. They came in really below all of these. I think my appraised value is 28 million. And 28 million is about $300,000 per unit. So it still didn't hit these numbers, but certainly not the average. But again, I'm starting at 150. This property we put in escrow for 16.5, and it has a $28 million appraisal on it. So when I found that is indeed a great deal, something that you could work on. Sorry, trying to recover here. When I put this in, this one had a cap rate that came back at like 8.9, and the market cap rate at the time was 6. And so my property cap rate was better than the market. And because of that, I'm like, okay, that's something I'm interested in doing. The higher you go as a class A or a class B, the cap rate is going to go lower, which means that you're not going to make as much money on it, so the price goes down. And so these are all C class properties. On a C class property, you're going to be down in the 5.5 range with a cap rate. And so that does become important. But at least when you put something like this together, you can kind of get an idea. Now, this is kind of a clustered little spreadsheet because I had a whole bunch of properties in different areas. Here's another one. Let me see. This one I did in Tucson, but I didn't really come out with as clear of an answer as I did on this one. Let me see if I can.
Yeah, we can see it now.
Okay, so price per unit. Tucson is a little bit lower area. This is the one right here, the one that I actually purchased in Tucson. And but this is at a no, I'm sorry, that's the sale price. Let me see, I purchased this for 4.3. So, thought I had the original on here. Don't, I'm not seeing it.
So
But
Roy, those other properties on there, were they for sale or were they sold? And those numbers were based on ones that were sold or ones that were for sale.
I'm gonna say these all came off of LoopNet.
Okay.
The place where you find sold properties is gonna be, CoStar.
Okay.
CoStar is gonna give you, and if you don't have access to CoStar, you need to find a commercial realtor that does. It's a fairly expensive subscription, and so most people don't have it. If you got a guy who's doing commercial that you're talking about this property, he should have it. And you can go get a CoStar report. Let's see. Let me see here. I've got one that I'll show you. Are you familiar with CoStar?
I haven't used it, but I've heard it talked about all the time.
Okay.
It's a very expensive thing to have, but the data is also not really updated. I think the commercial realtor, access to commercial realtor is important. Even the listing agent, you can ask them, hey, can you give me, rent comes, sales come in the area, whatever co-star, like where this number on your projection coming from, why you think it is the way it is, should roast them, and they're gonna give you, like, they give you the data to prove, to prove their OM, right?
Yes. Okay, this is an actual CoStar report. It's 138 pages long, and so they don't give them away free. Well, they do free, but not easy. And so in this case, subject property, now it's got, excuse me, this is the most current report that you're going to get. This particular one gives you all kinds of data, including construction, unit mix, availability, anyway, all that on every project. So the one in the left is the one that, I guess that's both, that's the one, that's our subject property. And so let me just kind of roll down through that because, we know that one. Come on. There's your, that's huge available information right there. Rent comparable summary. So here it gives you high, low, medium rent in the area, the number of projects that they compared it to. So, it's really good data. Here's, as an example, rent comp. So you can see all of the information on this. And then you kind of have to make a decision which one of these are in the A, B, or C category. In this case, this particular property is really kind of a B. There aren't any C in this town. And so, you've got some of these that have 3 bedrooms and, $3,000-4,000 a month rent on these things. But anyway, you can see from this, there's just tons of really good information on it. If you're new and you're trying to learn, find somebody and get this report. Now, let me think here. So again, okay, so what this is doing, this is now taking another building, giving you all the detail on it. Here's a $7,000 a month rent. That's not in my category, but it's interesting to know what those are. Here's $2,000 a month rent. That's a little bit higher than my category. Flip down a few more, give you all the details on the property. Here's one 1,100. This is right up my neighborhood, right? So now you can see comparable property, comparable price. Is that helpful for you? Am I just talking to myself?
No, that's
very, very helpful.
Okay.
So the 2 things on your spreadsheet that you had were cost of the property per unit and cost of the property per square foot.
Yes.
Okay.
And you can get all of that here. This I got like 6 months later and confirmed all the stuff that I had on that sheet, you know. I mean, sometimes we go through all this paperwork to get all the information, and then we're surprised when later on somebody gives us something and validates it. I like, who knows? How about
Right.
that? You know, but this has got great information on it, gives you everything. Now this one, that one is a rent pump. Let's see if I can find this other one here. Rental. Here's a sales pump. Another co-star. Where am I in this thing? Oh, there it is. Okay, so again, subject property, it's kind of giving you comparable information on it. It's going to show me my property first, blah, 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 and then you get down to subject, down to, come on. Great information right there, price per unit in thousands. It gives you low, high, median, okay? And now you're into sales comp. So here's their confirmation of the numbers that I found. That doesn't help much, does it? But you know, this category right here, you can see the price comparables, and I think somewhere, I don't know if there was an average ever done on it, but you know, in this particular area, we've got high of, I saw 493 El Lago, 493,000 a door, and a low of 121,000 a door. So you know, you got quite a variety. Well, I happen to know this one, Spanish Palm, is in a crappy part of another town, and that's not a comparison. So I'm higher than that. This one at 493 is a mile from my building, so I like that one. You know, I mean, that tells me I'm doing a good job, right? But my average ends up being
You're like 157, right? 158?
here's where I ended up, right here at 295, because
290.
300,000 per door times 94 doors is roughly 30 million. And so that's what the appraisal proved out. So you kind of get an idea of what they look like. Again, this one gives you the number of units, year vacant, year built is important. You know, anyway, all of those kind of things. So if you're unsure about a new property or about any property, definitely go grab one of these CoStar reports and get the information. And then be brutally honest with yourself. If it's a 3 cap and everything else is a 5 cap, you know, that's a big problem. So
Okay.
let me
So
see.
we need to get our hands on a commercial realtor in the area to really partner with on this then.
Yeah, that's the easiest way to find that out. Now let me see here. I did remember where I put this. I'll just grab this one right here, see if that'll give me what I'm looking for. Yeah. Okay, so when I went to my actual property, I produced this. Can y'all see that? Is that big enough?
Mm-hmm. Yep.
Number of units, projected rent. I was in the same boat. There were no comp. That the project was a conversion, and so I came up with, off of appraisal, what the cost per square foot was for these items. These are standard expenses in a projection. So the cost per square foot, the cost per unit, And then the seller gave me some of those numbers, and then I had to make my adjustments to come up with this based on that. And then this one is second year. So first year, second year, add the reserve, come up with the net operating income, throw the debt part into it. And then I ended up doing my own little projections on it. So on my project, I was projecting an 8.3 and then an 8.7 cap rate, but the market is still only 6. So, you know, that's telling me I'm a little bit higher cap rate than what the market does. If this was a 6 cap, that would be equal plus this divided by 0.0. Oops.
You use
Okay.
the second year, yeah.
Yeah. Equal plus, no, here. Equal plus this divided by 0.06. That would have put the price at 22.8.
You purchase for 16.5
So I got it for 16.5. Yeah.
and add on how much money into it?
I put in $1 million for $1 million of renovation.
Yeah, so 17.5 in.
Yeah. So, you know, that kind of a deal, that's telling me the market's saying that was worth 22. But I'm getting 16.5. 16.5 would be an 8.3 cap. But so the market rate's important. That's telling you what the market would do with it. And you can make projections, but if it's an occupied building, those projections are based on your ability to raise rates. If the seller is telling you, hey, you can raise the rent to that much, well, then raise it and then sell it. You know, raise it and then I'll buy it.
Right.
Right.
Rent is easy. Well, then go do it.
That was our
Yeah.
biggest struggle is how, you know, we're not going in and trying to just kick people out and raising it, you know, so much so. I mean, if it's vacancies, I can see where we improve it and then it just happens over time. But how do you go into 100% occupied place and just raise the rent, you know, across the board and looking at like what we would need to raise the rents to make it, you know, a reasonable deal. It's like kind of a lot. So
Yeah. Well, if you had a CoStar report with comparable rents, you would know if you pissed off your tenants, where are they going to go? Right. if you have the market, you're under the market, then you still kind of have to entice them to go in or to accept the higher rent. So sometimes you piss them off and they leave just because they leave. You know, they might have to call pro and, you know, come back, but you don't want to go through that. Much easier if you're ready to do it. It's much easier to talk to the tenant and see if you can raise rent, and you know, because of the market. And if the answer is no, well then what if we do, you know, $15,000 of improvement? Would you buy that one? You know, kind of thing.
Right.
So
no, that makes total sense. It's a lot to. No, there's a lot of that's a lot of good information. Yeah, because we need, you know, we're gonna go back and like look at like where this stands in relation to the market. Yeah.
let me do one more. Let me show you one more thing. Just because I'm actually in the middle of that right now. These out of the way. This out of the way. Let me go to this one. And we just did what the heck did I call that? Oh, I'm in the wrong one. Down here, I'm converting from Dropbox to Google Drive. Oh, horrible. All right, I think, no, nope, nope, nope. This is the one I was working. Oh, shoot, I don't want that one. I want worksheet. All right, this one up, get some visibility of it. Okay, so here I'm comparing 22, 23, 24 actuals, and then making projections for the next few years. And you can see on my base rent, it starts 4.3, 4.8, 4.9. I'm still 4.9, 5.1, 5.4, blah, 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 blah. Okay. The way that I did that is on my cash flow here. So I projected out all of the expenses going over the whole calendar year, projecting it out. And if I do, let's see, where do I have the, I'm not showing this on here. If I do $10,000 of unit repair, well, let me back up. And I'll tell you why. Because the market rent at this right here is right at market. So how do I get it over market in order to, to go up from there? What we came up with is a $10,000 repair per unit. Where did I do that calculation? You know what? Wait a minute. I know where it is. Okay.
But what you guys seeing is an underwriting model, right, Roy?
Yeah.
Yeah,
This is
so plug the
the
numbers in and
well,
So this is for a property you already own and you're projecting out, right? Or
oh,
this is
this is one I put in escrow yesterday.
an escrow. Okay. All right.
he's
So
gonna close at
how
the
do you
end
get
of
those
the week,
numbers?
right?
I'm sorry.
So how do you get the numbers for the previous years like that? This is what they've supplied you with, those numbers, or
Yes,
okay.
they have. They have to give you the 23, 20, 22, 23, and then 24, of course, is year to date. But when you get a T12, T12 is going to have all 12 months worth. So you get half of 23 and half of 24. So this number is kind of a manufactured number based on the latest information. And then based on that, you just start projecting out. And the way that I did that projection is if I renovate 8 units per month, and I have calculated in one of the other sheets that would allow me to raise the rent basically $80 a month. And so 8 times 8 is 640. So I'm doing a little bit more. That must be 85. 85 is 1734, 680. 680. So eight units, I'm raising the rent $85 a month. This is my rent increase going over the next 2 years. And then I've got 2 years, 3, 4, and 5 off the side of the sheet. So that's how I ended up, because I'm at the top of my market on rent. The only way to increase it is to spend $7,500 per unit renovating the unit to get 8 units done a month for $85 a month. And that's how I'm now projecting for my first total year to come up with an additional 45,000. Now, is 45,000 enough? Well, here's what happens. You take that 45,000 and you go down here to this number. So if we did equal plus this number here, and we subtract out of it 45,000, that's the actual number. And so equal plus this divided by 0.0, I'm gonna say 6 versus whoa, what happened? This versus this, and that's going to give you there. So, oh, this one we want to do on this. Now, equal plus this one minus this one. Raising rent $50,000, or no, what was it? 44,000. $44,000 gives me an additional $750,000 in equity.
Equity.
Is that worth it? Heck yeah. Right? So the same thing, second, third, fourth, by the time we end up doing this and project it out over the 5 years, well, let's just do it right here. Oh, I forgot to do this number. But this number is now, at the end of 5 years, let's take a total of all of these. So this number is going to be, sorry, I hope this was helpful for you. 257,040, 257,040. So there you go. There's the difference. Raising the rate $80 per unit ends up in a net value increase of 4,200,000. But it takes 5 years to get there. So, you know, if that's, if you're in for a long-term project, you know, then it's worth it. We raised, you know, 2.5 million, I mean, 257,000 over 5 years off of the actual net income. You know, I mean, you're not really doing anything, you're doing what you do anyway. I don't know, does that help?
Yeah.
So Roy,
Yeah.
so you also manage properties for so many years in the area. So when you see these numbers, you know whether it's realistic or not right away, right?
You know, I wish I could say that my crystal ball was really clear, but
I
it's
mean,
not.
the expenses, like, you know, construction.
I'll tell you, I did all of my work in Scottsdale. It's the higher end part of the Phoenix area. If I went to West Phoenix, I would have to go back and do all this same thing all over again because I don't know that market. And it's crazy how much just a little bit of distance will change all of that. And so, no, you kind of have to do this no matter what market you're in. And those expenses, although, okay, hold on. You did, I remember you did say the right thing. Those, my projected expenses on that one property came out of standard appraisals. So appraisals say this is the per unit cost, and those things are pretty universal. And so you can go to any property anywhere, plug those numbers in, and they should work. Many of the underwriting templates that some of the big guys use, they have all of those numbers preset in there. It doesn't really care what you're doing. Those numbers
That's
are
true.
preset. So
Yeah.
yeah, that helps to have a couple of appraisals in the area. But you know, plugging those numbers in isn't difficult. You just put the numbers in, and it comes out. It is what it is. and it's surprisingly accurate, you know, over the distance you're doing stuff.
Mhm. Well, thank you so much. That was helpful,
Yeah, thank
Roy.
you
That
so much.
was really helpful.
Yeah.
Yeah,
Uh,
thanks for sharing all that. It really helps like develop like a process of how we think about it. I think that the thing for this deal is we need to gather information, see where it sits. If it's really below market, it's like, would you take on that project knowing you have to increase the rents, or because that becomes on us to figure out how to do it. And then it's like, well, do you do it by do you have to how much money you have to put in to be able to increase it, or is it able to increase like as is with minor improvements?
Yeah. Here's my take on those two questions. Number one, the guy's going to sell the building because he needs to sell the building. So he's going to dump it on somebody somewhere. And you're in the market to buy. So, you know, what a happy marriage that is. And the second thing is, if he's asking a ridiculous price, he knows it's a ridiculous price. So if you do your homework and you come back and you say, look, cap rate is this, your value is this, your rental is that. If you're presenting this building to me the way it fits, it's not worth, I don't know, whatever, 275,000. It's worth 82,000. Go fix the rent, we'll buy the property. Or you know what, we'll compromise. Maybe instead of 172, let's do it 122. And if that's worth it, well, guess what? That's how you make money. Because if the guy is in a place and he knows it's a crappy deal and he knows he's got all these problems and he knows he's going to have to find somebody to buy this thing and get his burden, he may just give it to you for 120, you know, half
Right.
price, because you've
Right.
proven that the market isn't that dumb, you know, to absorb something that's not worth it. So yeah,
That makes
would
sense.
away, I would come up with what I was willing to pay and tell them, here's why. Here's what I'm willing to pay and here's why. So take a look at it. And if
And
they
then that,
do, if
yeah,
they
then it
don't,
becomes our opportunity to make it better, as
yeah,
opposed to like, so his problem, that the seller's problems become our opportunity if we can lower the property, what we buy it at.
yeah. I mean, if he's trying to maximize his money, the first thing he's going to do is going to do the renovation himself, and the second thing he's going to do is he's going to raise the rent. Because if he raises the rent, it now goes on his projection, and now you're going to pay for his raised rent. He didn't do that. Yeah, there's a problem. You know,
Right.
one way or another. The problem is there's a reason he can't raise the rent, or you know, the tenant that's in there all this time, 15 years, same tenant. You know, that's his mother-in-law. You know, that rent's not going up.
Right.
Things
Right.
like that. You know, your kid that you kicked out of the house, here, go, I'll rent you a place. You know, you pay half the rent, but you're out of my house, so it's worth it. So you don't know the answers to all of those things, but
Right.
fairly clear that you know he knows he's under market and he knows how to fix it and chooses not to.
Right.
Just an
Roy,
opinion.
Yeah, that's very good. That basically summarizes this whole situation, I think. So appreciate
yeah.
that.
So
Yeah,
also,
don't
I think Roy also, can you talk more about how you negotiate so you can go in with terms and not with down payment, a lot of down payment?
well. I mean, on all of the deals that I do, I never invest my money. Okay, it's all done with other people's money. Now, you know, there's three. Hi, Christian. Can't see your face, but I know you're there, buddy.
Christian. you just-
You know, the three of you guys that are here, one of you might be the investor, and the other one's bringing the cash, and the other one's doing the work. I'm the guy that does all the work, so I don't bring money to the table. And that's a little unique. Sometimes sellers don't like that. They want, you know, lender wants to see that you've got skin in the game. Well, I got real skin in the game, and so you know that's just the way I do it. But you can always negotiate with if the seller has I've got a scheduled Zoom call. I didn't see it's 9 o'clock, but hold on one second. Hey Brian, hold on, let me jump on.
Okay, I think Roy has to jump, guys. But
Thanks a lot,
appreciate
Roy.
you, Roy.
We really appreciate
Thank
it.
you. Come on.
Oh, hold on. Yeah, I'm in a Zoom call right now. Let's talk in a few minutes. All right, thanks. The people we were meeting on the Zoom call didn't show up, so anyway. Sorry, that totally rattled me. Where are we at?
So
Yeah, I go into these deals with, with no money down. And so I bring in investors and give away big pieces to people that come in and bring the money. But you should always attempt to get the seller to carry back as much as they will. And your conversation with them, I mean, I don't know, this might be normal to you know all this, but the conversation is if they've got a loan on the property. Right now, a lot of existing loans are down in the 3-4% range, and you hate to throw one of those away because that's cheap money. But if they've got a low interest loan and you're filling a gap, maybe half the cost of the sale, will get the seller to carry back a bunch. If he's way overpriced the project, you can make it work if you can get really low terms on a seller carryback. In fact, sometimes if you give him enough an seller carryback, you don't have to put anything. He'll let you just have the property, and you agree to make monthly payments, and everybody wins. So that's another option too. But yeah, depending on how the deal was presented, it's a C property, so already it's kind of rough, right? But if somebody's just tired of dealing with it, that's a good way to get it. You get it for inexpensive money. The market right now is probably down 30%. If you hold on to it for a couple of years, you'll probably get that 30% back and more. And so I'm not afraid in this market. I'm not afraid to pay a little bit over what the current price is, or the current price should be, because I know that in a few years that price is going to come back. So it's like buying stock at the buy low, sell high. Right now the market's low, so I'm okay paying a little bit more because I know what's coming. So, anyway, that's
right.
yeah. There's lots of ways to negotiate that deal. So I don't know who all of the players are here and how they're connected with Sophie. And are you raising money for their deals, or what's the connection of all of the parties?
Yeah,
Oh,
Tim and I are business partners, and we have in that area that building is there. We have 11 single family homes there.
Yeah.
And we're looking to convert to multifamily. We're at that point now where we're ready to convert. So so the idea is to, sell off some of those properties to get into multifamily.
Okay.
So that's our a high level plan, I guess, on how we're getting into it.
yeah, I met Terran and Tim at a real estate event in Philadelphia, and that's how we met. And they come on to the virtual meetup. I organize this every week, Roy, to
Okay.
connect with other investor, like real estate investor in general. But a lot of us are wanting to get into commercial. So
Yeah. Well, I'm a part of Tim Mai's group. I'm also a part of Tate Morby's Squad Up, and that's the big group.
you're
But I've
everywhere.
so much on my plate right now. I don't even have time to get on there. If it wasn't for Sophie, I wouldn't be here now. But she's awesome, so I'm going to support you.
Thank you so
So,
much, Roy. You're the
yeah.
best.
The other thing that I did was on this Fountain Hills deal. I've got. Is it okay if I tell them how I'm doing it, Sophie?
Yeah.
So I've got 30 investors that put in 100,000 or less. right? I mean, the smaller investors. But I committed to all 30 of them that if they wanted to, that I would help them buy a multifamily. Now, because of my background, doing these units is easy. That, daily stuff. But because I have some of the experience in that area, anybody that invests, I'll help you buy a multifamily. And the multifamily for me is 70 unit minimum. And the reason is less than 70 units. Hey, Brian,
Hey,
less
Brian.
than 70 units, you're the property manager. Brian, you're not in Houston, are you?
No.
Less than 70 units, you're the property manager. Well, I don't want to be the property manager, and so that's my limit. And most of the properties, if you're looking at the multifamily, what was your per unit cost? Do you remember?
You're saying for
150.
this? Go ahead, Sophie.
Yeah, 150 something per unit. This.
Okay, so 150 per unit, and we're doing 70 units minimum. So that's about $1.5 million, right? Excuse me, 10.5 million. So when we're doing these kind of projects, we're doing 10, 11, up to $19 million projects that I'm helping these guys get into. So, and of course, the benefit to you is I bring all of the property management of that size and the construction of that. And so, and I basically help you walk you through with all of the stuff that I've been doing. So anyway, that's where I'm at with all of these projects.
That's the power of passive investing, because when you passive investing, it's kind of like you establish a relationship and you can have a different choice, right? Like you kind of, if you put your money into this deal, probably 1.4 million, then you have to down payment maybe 700, 800, or even more now. Like you would need 30% to do down payment. Then that money you can put diverse into 50K here, 100K there, to establish your relationship with different operators in different market, or on your right on your market. So they became you invested in them, so they're gonna invest back to you. And of course you're gonna find people with um like that you feel like they're gonna be the good partner to partner with.
Yeah.
So like basically this game we need to partner up.
Yeah, there's too much to learn in a multifamily to try to wing it. And so you're trading one challenge for another. You don't want 20 single family homes because they're a management nightmare. But if you have a 20 unit apartment building, it's just as much of a nightmare, but it's all in the same building, and so that's why I just picked 70. I'm like, I don't want less than that. I want somebody else to be able to handle that job so that I'm not getting called all the time to do that. And so because of that, I'll go anywhere in the country. Like I said, I'm living in Scottsdale, Arizona. This project that we just looked at is in Tampa. And I've got two others in Jacksonville. I've got one going in Connecticut right now because that's one of the investors that wants it. And Tigger is in Chicago, and so we're looking for one for her. So, I mean, I'm looking for 6 or 7 of them right now, and I'm doing that with investors that that are already working on deals. I'm really not trying to pitch you. I'm just saying that's how I'm running these projects. And so my advice to you is rather than put all of your eggs into a basket like this one and have to learn the hard way, is to invest with other people who are already doing it and get your form, get your management, get all of those things lined up and ready for you so that when you're ready to grab your own, you've already got some experience. You've had some of the conversations. You've seen the financials, and you see the projections about what's necessary or what's possible. You know, so you come in as well. And the other thing is, as an example, if I've got a 400 unit and you invest 100,000, now on your balance sheet, you show that you're an owner of a 407. People go, whoa, you got a 400 here and a 300 here and a 200 here. You know, my qualifying party on my $10 million fund financing on this project, the guy owns 1,000 units, but his net worth is only 10 million. Well, 10 million by 1,000 units doesn't add up to, you know, a whole lot of units, $1 per unit. So he has ownership of 1,000 units, and his balance sheet's impressive. But he only has 100 here, 50 here, you know, 80,000 over here, but you're still claiming I'm an owner. You are. So your balance sheet looks awesome because you've got all these other projects. And then when you go later, you know, a couple of years down the line, and you say, okay, I'm ready to try to convince the bank to give me $10 million, you know, your balance sheet says I've got property here and here and here, and I've got all these different places, and I've got, you know, 1,000 units that I'm already an owner on. Now I want to be the sponsor, you know, however you end up doing. The way that I'm working with my partners is I come on as the sponsor. I bring all of the first position money, basically 80% of the purchase price. And then you and I work on how do we raise the 20%. Some of it you bring in, some of it you'll bring investors in, some of it Sophie has in her back pocket, and the rest of it Brian has in his mattress. You know, and you just start talking to people and raise that cash, and that's enough to do the deal. So I come in as the sponsor, you come in as the owner, and
That's the reason, like some of us go buy 14 unit because we don't our net worth is not enough to get a loan more than 2 million, let's say, right? But people like Roy, you can partner with, so Roy can bring in that net worth, so he can be on the loan with us. So, but also needs loan also. If you on the loan once, you can keep getting it. But then if it's your first time getting a Freddie Mac, they're not gonna give you.
yeah,
Even you have a net worth, you still have the experience and net worth to get that. So
yeah,
that's why like the first deal that you're gonna go more than 60 unit, then instead of buying 20, you can partner with 2 more partner, the same money you bring in if you don't raise, but you now better off have a property management in place, people that lead you into being a co-signer on a loan in the institutional loan company like Freddie Mac. Then next deal you go in do by yourself, you still can sign on that loan.
yeah. So basically, I come in and I say, I've got all of the management and construction experience, and you and I would sign on a loan for you. When you go out to get your first loan, you and I sign to get the loan, and then now you've got credibility to do your next one and your next one, and you just start multiplying from there. And that's essentially how I built mine. With the 400 and the 100 unit here in Phoenix, just those two is a $50 million deal that I'm a majority owner on. So all of a sudden, you know, I'm showing now that was an airplane flight from Tampa to Phoenix. I got this cost, man. I'm dying here. Oh, sorry.
You
Anyway,
okay?
that's the best way to go into multifamily is partner and grow until you're ready to jump out and do it on your own. So that's just my opinion. But you certainly can do it. You've got, I gave you some, really good tips on how to find out more about your own deal and maybe negotiating some of that kind of stuff. But yeah, if you're interested, if you do move through with a project, keep my information around. I'll talk to you. You run into a snag, you run into a problem, I don't have any problem. I'm available and talk all the time. So let me put this in here for you.
Yeah, get Roy information, guys. Of course, Brian, you don't need it.
Hey, hey guys,
Hey,
Hey, Brian.
nice to see you all. Yeah, and Roy's, he's a wealth of knowledge, if you can't tell already, and super friendly, willing to, talk. And I saw him recently talk down a mutual friend that was having trouble with his financing, and he was stressing really hard about it. And Roy's advice was walk away. There are other lenders that'll do the deal for you. You're not done until it's done. So lenders like that are a dime a dozen. So just walk on and find another one. Don't throw the baby out with the bathwater, so to speak. So
Talking
that's good
about Wang's
advice.
deal. Wang's
Yeah,
deal.
Wang's deal. Yeah,
Yeah.
for sure.
You
Yeah.
worked on that, right?
Yeah, so Tim and Tara, like Ryan, Roy, me, Wang, like we part of the mastermind group from Colombia. We met in Colombia, and we all had a pleasure to spend time with Paul Hutchinson, who also did this on the capital side, and then eventually buy up a management company and buy up multifamily and build a $40 billion asset under management company until he exit and do just charity work.
Yeah. All right. Well,
Okay.
sorry, Sophie, I kind of took over your story here, but
Cool, Roy. I see you tonight. I see you around. I know you
okay.
have to jump on another call, right? Yeah.
Yeah.
Thanks a lot, Roy.
All right. Thank you. Thanks, guys.
Yep.
Yeah,
Bye.
I'm late, but I'm glad I was able to jump on. Good to
Thank
see
you,
you all.
Brian.
Yeah, take care.
all right, see you.
All right. Bye.
Okay, Team Terran,
Thank
good
you so
luck.
much.
All
Yeah.
right, thank you.
And you see that. You see Roy buying really good deal. Like when you see it, a good deal is a good deal. When the number is like that, it's not. Just call up the agent and tell them what is the story behind this. Do they really want to sell? Why do they
Right,
put a 3.5 cap rate out there? Are they crazy? And
right.
then they'll tell you a story, and then
Yep. Yeah, more info definitely needed.
So
Yeah.
I know who the property management company is. So would I just talk to them about just kind of confirming the expenses on the property? Just do okay.
Yeah, you can talk to them, but also there's always due diligence. You don't trust them, right? You have to check with another third party management company as well to see
Okay.
what is it realistic. But also
Mhm.
when you do due diligence, make sure it's not a cookbook. So when they give you rent roll T12, it's when is it they make it up random number or is it real? Are the tenants really paying 100% occupied because they lazy, they can't evict? Or is it real occupied, right? Things like that.
Yeah.
So
That's
how do I
yeah.
find that out? Like how do I confirm that? That seems
Well,
I
you
don't know how
need
to
to work each unit before
uh
you, like when you go under contract or even like when they do showing, you have to notice whether who are the people living in this complex. Are they the kind of people that gonna, live here for free, or they are like decent working people, or who they are these people? Have to
right.
notice. Because I heard a story, people buy 300 unit and later on find out that all the book was cooked, that was right after COVID. Then like there are tons of eviction to be done, but the
Right.
seller totally like cook the book and then tell them that it's occupied, but it's not. It's
Right.
actually delinquency. And they got into really big trouble. And even they go back, sue, whatever, it's still they have the property in hand now with
Right.
like burning on their hands, right?
Right.
Right.
Yeah.
Okay.
Yeah. So due diligence as everything. Yep.
Okay. Okay.
All right, guys.
Yeah,
So
it's been
one
very
last
helpful.
one last question for you, Sophie. So what do you have going on right now?
What do I have going on? Yeah, so close up a couple of deals. So one deal in Dallas, 506C, the Milo, that's done. And then one deal in North Carolina, that's done too, just closed last week, I think. And now I'm looking at different things right now. Try to learn from our friends about retail street mall.
Hmm.
And still with Roy, I'm gonna look for a deal to do with Roy as well.
Okay. Good.
And
Good.
it's not kind of like 60 plus unit, because like I was in your phase right now, right? Like there are different phase, and then like there's a phase where I almost buy like a 30-40 unit properties, and we almost like just put all our money in there and just run it ourselves, me and my husband. And I'm glad I didn't do it. So now open myself and keep, because if I do that, I'm busy for a couple of years. I'm busy
Right.
for a couple of years for sure, and I miss on the opportunity to do more deals and diverse my portfolio instead of just sticking to that one deal. And then like, oh, I'm good. I'm not gonna. I have to go out work on this thing of
Right.
mine. And the return on investment of that might be good, but the exponential role is not there.
Opportunity loss.
Yes, yes, kind of like
Yeah.
that. So now I'm glad that like I'm in like 200 unit, 150 unit, and if I do it as a lead or like run it as operator, then it's a 60 plus. So I can have management company do it for me, and it's scalable.
Okay.
Okay.
All right.
All right, guys.
Well, this has been
Thanks a
great.
lot.
Thank you so
Yeah,
much.
very, very much appreciated. Thanks a lot.
Awesome. Awesome.
Okay.
Enjoy your week. Yeah.
Yep.
All right.
Bye.
See ya. Bye.
See you. Bye.